Let's get the management breakdown. Kirkland's CEO, Tony Makuch, who's going to be the CEO of the new company, which will keep the Agnico name. Agnico's longtime CEO, Sean Boyd, who will be executive chair, both joining us this morning. Gentlemen, we appreciate your time. Thanks for being with us.
Yeah, good to be here.
Sean, why don't I start with you? And, you know, obviously, people are always curious about how deals like this come together. When did the two of you start talking?
It was over 2 years ago, and it was really around looking at the collective asset bases and trying to understand the opportunity to combine and take advantage of synergies. And so it always takes a while. These things don't happen often when you get a merger of equals. They're not easy to do, but we could see early on that there was potential for significant synergies. The strategic rationale was always there. And so we kept working and got a good view of the asset base and got a good sense of the synergies, which over 10 years can be $2 billion. We think we can actually do better than that. So that was what kept things moving forward. And then, as we've always said, and we've talked when we've been on BNN about the need for consolidation in the space, and we've always felt that the best way for the industry is look for ways where you can actually create stronger companies, lower risk, higher quality, but take advantage of regional synergies, and this certainly does all of those things.
And Tony, you're certainly familiar with deal activity yourself. When you first came to the table, I guess a couple of years ago, as Sean was alluding to, was it this same philosophy that sort of brought you to the table to think about how things might shake out?
Well, yes, for sure. I mean, you know, what I've accomplished, I mean, in terms of what we've been trying to do for a long time is recognizing that you create more value by being able to combine, combine assets or thinking in regions and not competing for people, not competing for a social license, but actually be able to build upon that much more strongly. And you know, when it comes to exploration, development, or whatever that goes on in these regions, you know, the stronger you are, the more opportunities you have to look more broadly geographically. I think that helps, and it definitely helps in terms of being able to get more value from, let's say, the central mills or the mines, and in terms of what you're trying to do in the area. So, you know, the biggest part with this, and you know, I guess maybe sometimes I always sit there and say, you know, we have to leave our egos on the streets, and we have to look at what do we do to create a better company, create value for shareholders and value for all stakeholders, the people, the local communities in the regions, the people that work for us, create more opportunity for people, create more value, opportunity, and be able to be more responsible partners with our local communities in the areas where we work, and our indigenous communities, our indigenous partners, but and then fundamentally be able to do that to definitely create more value for shareholders and create that investment climate that people want to invest in. And then this really helps us in terms of, you know, I mean, I'm born into the gold mining industry. This helps us to transform the industry and really demonstrate leadership in the industry and where we can take it, where we can go. So,
Sean, that idea of shareholder value, and we referenced the sort of the move away from premiums, so to speak, in the industry. It's been something we've seen with a number of deals. Can you just walk us through how you guys settle on this math behind the deal?
Yeah, I think you've got to do the deep review of all the assets, which we've done on both sides. We look at the synergies that are then shared by both shareholders. You know, you never get the perfect time to do this. This morning, you know, Tony's been asked why now. We've been asked sort of why now. I think what we both see, and the reason these deals end up getting done, is we both see opportunity in both asset bases, and so I think that's really important. But I think what also is critical here in a Canadian context is we're essentially creating a Canadian mining champion with a market cap of $25 billion, with EBITDA of between $3.5 and $4 billion, financially extremely strong, a robust pipeline, and basically setting up this business to be strong for the next 10 to 20 years. So that was the key behind all of this. And in terms of ratios, just looking at the fundamental value, not wanting to pay a premium. We've seen in the industry where big premiums have actually destroyed value. This has been about unlocking value, and that was the basis that we were able to see common ground and get this announced this morning.
And Tony, just going back to you before we wrap things up, obviously to have a lot more strength, particularly in this country, I do wonder about some of the other assets, Fosterville, for example, the Australian exposure. Obviously, it's been a key asset. Does it make sense? In other words, are there more moves to watch for as this deal comes together?
Well, I think definitely what we see at the definitely you can see the benefits of what we're doing in terms of Canada and particularly in the Abitibi region, northeastern Ontario, northwestern Quebec. But I mean, this actually helps us in terms of building strength in Australia in terms of our ability to continue to. I mean, the operations in Australia are very special. The Fosterville mine is a very special mine, and that region is definitely very prolific from an exploration point of view. It gives us a larger scale, a larger ability to have a larger scale of presence and more regional presence. More global. Countrywide presence in Australia gives us the opportunity to grow there. I would say that similarly in terms of the other regions with the company has, which say in Finland and in Mexico, it gives you the opportunity to grow those businesses much more aggressively too. We are a business that wants to be profitable, but we're gold miners, and we're going to focus on responsible gold mining and setting these businesses up for multiple decade profitable and sustainable operations.
All right, Tony and Sean, thanks for the time this morning. A busy one. We appreciate it.
Thank you.
Thank you.